is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Welcome back to another episode of DeFi Decoded. My name is Andrew Young. Co-host Alex Tapscott is unfortunately away this week, so I will be soloing the show today. And I'm with two awesome guests from one of the most exciting projects in the space called Eclipse. So today I'm here with Terry, who's the head of strategy at Eclipse, as well as Ren, who's a growth marketer at Eclipse. So usually before we start, we want to get kind of into like the personal background of the different hosts, or I should say guests. So Terry, why don't you start us off? Why don't you tell us a little bit about your background and how you kind of got into working on Eclipse?
Yeah, for sure. So my background is in crypto. I started my career as a VC analyst doing research and investing at 1KX Network, where I was focused on infrastructure, but also gaming and NFTs, NFT marketplaces, NFT finance in particular. And in the process, I was studying kind of the trend of infrastructure. We had a certain, through empirical benchmarks that ZKVMs were improving at a very fast pace, that data throughput in alternative DA layers was also improving at a very fast pace, such that we're at a point in modular infrastructure where it could be possible to innovate on the execution stack, right? And then on the other side, we were looking at on-chain games, and fully on-chain games in particular, where a lot of teams were unsatisfied with the infrastructure they had in terms of the execution environment, and they were moving to their own modular stacks. So things like proof of play, Redstone, they were experiencing congestion on general purpose execution environments, and then therefore moving on to their own modular stack with modified execution environments. So things like mirroring, where they could read trustlessly the L1 state, or things like, different precompiles, built-in ECS engine, etc. So kind of like being in VC for 2.5 years and observing all these trends, I made the decision to, the future is in execution. There's a huge demand and a need for this. Apps are demanding, a certain innovation in this layer. Let's go build it, and let's go, join a team that I think is working at the frontier of this space.
Awesome. And Ren?
Yeah, I got into crypto around April 2021. I think by then Bitcoin was already 50K, basically. Bought the top, aped in because, like everyone else, a friend told me bro, you should trade crypto. You can make so much money. Went too ham on the leverage on FTX, eventually figured okay, maybe I should probably get a role in crypto. This space is really interesting. Did the classic thing, read the Bitcoin white paper. I think I traded crypto for a few months before I actually even bothered to read the Bitcoin white paper. But once I did read the Bitcoin white paper, I was hooked. So I started off at a super small hedge fund, just running on-chain yield farming strategies, both delta neutral and market long. Did that for a bit. And then I was okay, I don't want to manage people's money forever. I also don't want to be trading the ETH merge at 3 a.m. forever. So I was I really want to dive into the tech a bit more, right? So then I landed at Blockworks Research, which is sort of the research arm of Blockworks, a big media firm. And there I basically spent 1.5 years just diving into every corner of crypto, whether that's bridges, oracles, dexes, perp dexes. We also hosted our own podcast. We built our own research platform. And then I think I reached a point where I was okay, this research is super fun and all. I get to spend every month diving into a completely different topic of my choosing. But at some point, I want to sort of be more on the ground and have an actual impact on crypto, right? So then the conversation became, what do I want to do? Who do I want to join, right? And I basically evaluated the landscape today. And if you look at a lot of the L2s, right? Sure, they are kind of scaling Ethereum execution in some sense, but they weren't super exciting to me, right? They were Arbitrum, Optimism, all of them had basically 10, max 30 TPS pre-4844. And you saw Solana had this insane come up ever since the bottom from late Q3, Q4 last year. And I basically looked at Eclipse as a super exciting experiment where we could combine the best of Solana and Ethereum and where we have the opportunity to build something that's one order of magnitude better than existing L2s today on Ethereum. And that's sort of like the why Eclipse and why specifically this role, which is pretty different from research at the end of the day. I think just something that's more on the ground, like helping out to build out the project from like a very grassroots perspective, whether that's working with ecosystem teams, working on building the community, working on sort of our positioning and branding, was just something that I was like innately interested in. I've done startups in the past, and that's something that sort of like wanted to return to from like on the roots. So yeah, that's kind of like why Eclipse, why growth marketing, and how I got here today.
Awesome. So in very simple terms, can you just kind of describe what Eclipse is and why it's different than other L2s? And then also just as like a follow-up, why should people be so excited about the sort of like upcoming launch of it? Maybe Terry, do you want to start us off there?
Yeah, for sure. Very simple terms, Eclipse is bringing Solana onto Ethereum. Another step further, it's going to be the first Solana Virtual Machine L2, likely going to be the fastest layer 2 on Ethereum. And that's kind of how it's different from other L2s today. Most L2s today are vanilla EVM compatible EVM equivalent L2s with slight modifications either in their value dynamics. So for example, you get yield on your deposits, or the fraud-proof mechanism is optimistic versus ZK. But the execution environment and how users interact with the interface and kind of dApps on each of the L2s are rather homogeneous. Will be one of the first different virtual machine L2s to be on Ethereum. The others are Starknet and Fuel. Those are live today. Movement, I believe, is also on the horizon as well.
Yeah, and we've actually talked a little bit about this on the show between kind of how we see like almost like an emerging trifecta of different execution environments where you have EVM, SVM, and then Move sort of seems like another one that is trying to make a play. Can you for the most part, I would say we've interviewed mostly founders of chains, like EVM chains. Do you want to just kind of describe like how SVM is better than EVM, or like maybe just different, and how it provides value to app developers beyond just kind of, because obviously with EVM, one of the big advantages there is there's already a huge community of people, of developers that you can tap into. Obviously with SVM, with kind of the emergence of Solana over the last 12 months, there's like a increasingly larger pool of devs there too. But yeah, do you want to just kind of quickly compare and contrast like SVM versus EVM?
Yeah, for sure. And this can kind of go into the tail end of your last question, which was why should people care and what's different? And first thing to be specific is I'll compare the execution environments. So the VM is more so, the wire formatting, how the virtual machine executes transactions against state, how it allocates memory and things like that. I think that's an implementation detail, not super relevant to the conversation. I'm going to talk about the general execution environment of the Solana Virtual Machine and the Ethereum Virtual Machine. And I think in crypto, that's how people kind of talk about it when they talk about the virtual machine. So one of the first differences is in the transaction format. So in Solana versus Ethereum, you have to specify all the accounts and the programs that you're touching in advance. And it uses an account model. So whereas in Ethereum, say for example, this is a good example, you have multiple contracts that are a ERC20. So, like Uniswap is a different ERC20, DYDX is a different ERC20. In Solana, there's one token program, and you create accounts that hold the token and interact with the token program whenever you're transacting, say, for example, transferring a token. And in that sense, instead of multiple contracts being allocated on the virtual machine or like in state to represent 100 different contracts, you merely have representations of, okay, my EOA owns this token, and whenever I interact and trade the token, I interact with the token contract. But in the process, whenever you submit a transaction, you need to specify all the accounts and the programs that you're touching. So what does that actually mean for practice? This allows something called pessimistic concurrency, whereas in Ethereum, and it's not being done in Ethereum, but say, for example, in Monad or other parallel EVM ecosystems, you run a parallel execution algorithm called block STM, where you do optimistic concurrency. So you run all the transactions as if, there are no conflicts. And then you rerun the transactions where there are conflicts until over and over again, at the very end, you've resolved all conflicts. In the Solana virtual machine, because you already specify which accounts you touch in the transaction itself, a central scheduler can pre-allocate, which transactions can run in parallel and slot them to run in parallel. We conjecture, we don't have exact empirical evidence. It's very hard to actually compare apples to apples, right? Because it's different transactions, different kind of contracts, different run times, etc. But we conjecture that the SVM is more performant in that regard. So that's number one. Number two, which I think is pretty important, is there is certain limitations in the creation of blocks in Solana that are actually beneficial for app developers. So in Solana, each account, you can only take up 25% of the total block gas. So kind of in Ethereum terms, that might be something equivalent to, okay, each transaction can only write to a certain contract, say 25% of the block of the gas. What that means, in essence, is that you don't have this problem where one dApp or like say trading on one pool or like a single NFT mint or an airdrop takes up the entirety of the gas of the block and therefore prices out every single other person that wants to transact on that block. And that's possible again because you declare what state you're touching up front, so you're able to enforce those constraints at the block creation level without then having to go back and at the very end of execution create a full block, right? And kind of the other thing that leads into that is there's proposals in Solana to do per account local gas fee markets. So in Ethereum, you have a whole block priority gas auction where the more you pay, the higher you're getting onto the top of the block. In Solana, right now there is a priority gas auction, but it is per account where each account there's a central scheduler that puts each account into kind of like, okay, these will get scheduled here, these will get scheduled here in these specific slots and windows. And these are ordered by the priority fees per account. But there are also proposals where that this will become more explicit, right? Where you enforce, say, an EIP 1559 mechanism for, okay, if you want to write to this storage slot, a lot of people are written to that storage slot, therefore we will increase the gas fees. And that's very, very new. And kind of both of these combined introduce both interblock and intra-block local fee markets. Again, kind of to summarize everything, what is the purpose of that for users? It's that there will not be congestion or significant congestion from one dApp that spills over into the other. And those two are kind of the big differences. If you want to get more technical, like Solana doesn't do real-time Merkleization per block. Again, this is not also a requirement in the EVM. So Monad is doing delayed Merkleization, and that speeds up a lot of the execution time.
And for you, Ren, how are you guys thinking of approaching community building with kind of like this, highly unique? From what I understand, you guys will be the first kind of SVM L2 on Ethereum. So it's kind of, to me, it sort of seems like almost like contradictions in terms. So yeah, how are you thinking of like building the community and sort of like getting developers and projects onto the Eclipse L2?
Yeah, obviously we sit at the intersection of two highly sort of controversial ecosystems who historically have gone against each other. I think the two main characters there are probably the Bankless gang and like Mert and his following. They haven't always been best friends, and that's also why I think Eclipse is such an interesting experiment. I think a lot of like the conflict on the timeline has more so come from sort of like thought leaders, founders, researchers, less so from like retail users. So there's a few things on the community front that we're thinking of, right? The first is we want to build our own community. We don't want to just be like a subset of Ethereum community plus a subset of Solana's community, right? I think if we approach it through that route, like we're never going to be anything more than like Solana, like half Solana plus Solana Ethereum, where like ideally in the end state, we are able to sort of grow and have a flourishing ecosystem and community. The second thing that I want to say about community is that you've seen a lot of like projects. They've launched like Galaxy Quest, ZD Quest. You go follow their Twitter, you go listen to their AMA. They have like endless grinds and like God knows how many tiers in their Discord. just to like quote unquote farm their users. I think that's something that was strongly against, and I don't think that's something that we're ever gonna do, right? Sure, I see the value in like engaging your users, but ultimately what we want to do with our community is to play long-term games and align with those that are here for the long term rather than those who are here for sort of slightly more short-term results, right? And yeah, I don't think we have like the largest like Twitter following, or we don't have the largest like Discord size compared to other, for example, like L2s with like other alternative VMs. And I'm going to be very honest about that. But I do think that we've managed to create a much more organic community than perhaps some of these other sort of ecosystem communities. From the dApp developer front, at the end of the day, we are ultimately using the SVM. So our target audience from like a sort of crypto native builder perspective, right? That is very much so sort of like the Rust side of things and the SVM side of developers. And I think towards that camp, there's sort of a key value proposition, right? You've built out your app on Solana, or you want sort of the speed of Solana, but perhaps you want to try out something else with access to Ethereum's liquidity, right? At the end of the day, ETH is still the second largest asset in crypto. It's an order of magnitude larger than Solana. Not an order of magnitude, but let's say like 5x before the Solana people come and hate on me. And I do think that makes a significant difference, right? If we look at any metrics such as like TVL, assets available, bridging activity on Ethereum, that is still larger than Solana today. And so I think that one of the core value propositions for existing Solana devs or sort of like SVM developers is experimenting and being able to tap in to Ethereum's liquidity as of today. I think another thing that we think a lot about too is not tapping into existing crypto builders, right? A lot of other ecosystems try to tap into like the same group of crypto devs out there. I don't know how many crypto devs are out there. I think there's probably some electric capital developer reports floating around, but I do think that we want to try something different, right? So we do want to target the sort of non-crypto devs and take a very much more like grassroots educational approach in sort of educating them what crypto is, what blockchains is, what it enables, and how you can potentially build more valuable products on blockchain rails than on sort of Web2 non-blockchain rails. And so that's also going to be a large part of our developer approach, approaching these sort of like slightly more Web2 founders. And I do think that Web2 founders, as of today, probably have a better idea of how to build mass consumer apps for real world adoption than crypto builders today. And I'm not saying that like we don't want the crypto builders. We still want sort of like the DeFi primitives. We still want the degeneracy. We still want sort of like the meme coin and selective like meme coin infrastructure. But we also think that there's a much larger world beyond that, right? And Eclipse and its execution environment is uniquely suited to enable those sort of use cases beyond that too. And so that's something that we're super excited about in terms of onboarding developers.
For sure. And I'm just kind of curious as a follow on to that, is there any like specific, subsectors of the Solana ecosystem that you think would be, that you guys are targeting or you think would be sort of like a good match to launch on Eclipse? Like obviously we've talked a lot on the show about how Solana has found a ton of product market fit with like meme coin trading. Pumped Up Fund, I think at some points did more daily revenue than Ethereum, which is just crazy. So I guess I'm just kind of, I don't know if it's meme coin trading or whatnot, but I'm just kind of curious if there's certain like subsectors that you guys are targeting, whether that's like DeFi or something else.
Yeah, as of today, I think there's two things that you need to look at, right? Where crypto and its on-chain users are today and the state of that market, and where in a slightly more idealistic and practical world you want crypto to go in a few years, right? As far as where crypto is today, we're kind of focused on a few main categories. The first is DeFi. I think a large number of devs that will be deploying on Eclipse are sort of DeFi primitives, some existing and some novel. And another one is probably gaming. I think we have a relatively decent gaming ecosystem that we're very excited about. And it's sort of, there's this like interesting backstory to Eclipse I can't share that much about, but like all of our games share this like central theme, which I think is pretty exciting. As far as what we are excited about in the future, let me add one more. Meme coins. We're definitely interested in meme coins. It's very much an attention game. And so we also have to play that same attention game. As far as what we're excited for in the future, right? I think consumer is definitely like the end game that we are sort of targeting to. And there's a few ways of looking at consumer. The first is like sort of like crypto native consumer, where you think like meme coins are going to scale to like a billion people, and like a billion people across the world are going to trade meme coins, whether that's like politify coins or just like a million pumped up fund tokens are going to be created for today. We do have to index on that future and that potentially happening too. And B, we also have to sort of be considerate that there's another version of that future, which is very much more like real world infused, whether that's like DeFi and the majority of assets on chain being like sort of RWAs, T-bills, tokenized versions of different things rather than just pure on-chain degeneracy. And the second is definitely like the more consumer side of things, like whether that's marketplaces, B2B2C platforms, consumer apps such as payments, remittances. So that's something that we're actively sort of like building towards. I think that's not something that's going to happen overnight, where sort of like the meme coin, DeFi, gaming can probably happen overnight. But those are sort of the categories that we're targeting as of right now.
Awesome. Yeah, and another thing I also want to touch on is like one of the things we talk a lot about on the show is the different approaches to scaling. So Solana is, essentially trying to be like a monolithic chain, everyone on the base layer, and just like scale the base layer as much as possible. Whereas Ethereum has taken like a very different approach, where you have fragmentation and segmentation with different layers. Where we've built layer 2. I think we have like 100 different layer 2s now, and we're now starting to see some layer 3s as well, which is kind of crazy. So I guess for you, Terry, maybe how are you guys thinking about scaling Eclipse itself? So like I guess what I'm trying to say is, do you envision a future where your entire ecosystem is on the Eclipse L2, or do you guys kind of believe in a future where people can launch their own L3s that sort of settle onto the Eclipse L2? So I guess I'm just kind of curious. Yeah, how are you guys thinking about scaling, whether sort of monolithic or sort of layer 3s and things like that?
Yeah, I guess you could call that monolithic modular. We would like everything to be on one L2. As everyone has experienced, L2 fragmentation is bad for UX, and it isn't quite clear if we can solve interoperability, opt-in interoperability, specifically synchronous opt-in interoperability from a social coordination standpoint. So what we want to do is, I don't think a lot of people have taken advantage of the fact, but if you're a roll-up, you have a one-event re-execution security guarantee, safety guarantee. Or if you're a ZK rollup, you don't even have that at all. Someone just needs to verify the ZKP. You can therefore, as long as you keep re-execution costs relatively low or proving costs subdued such that you can maintain the prover, you can put as much power into the sequencer as you can possibly, ever want, such that it satisfies the entirety of possible transaction demand today. And that's what we think is the kind of next step in scaling. Now, we don't know if there's suddenly tomorrow, 2 billion people transacting on chain. Will that be sufficient? We don't have an answer yet. But at the current levels and what we see tomorrow, the levels of transaction demand coming into crypto, we think a thick sequencer on the L2 layer with low re-execution costs is probably going to be sufficient to scale all transaction demand in one layer 2.
I think I would add on to that. If someone builds an L3 on Eclipse's L2, I think we've failed our mission. Like, I'll put it very plainly. I think the goal of Eclipse is to build the best app platform there is with the best distribution available. And it is our job to sort of like align the incentives so that apps stay on Eclipse. Right? And there's like a few components of that. The first is from sort of like a block space perspective. A lot of different apps have launched their own L2 because they want dedicated block space and they don't want to be priced out of block space just because some other like event is happening on the network. And I think that SVM solves that with its sort of 25% CU limit and local fee markets. The other one is from sort of like an execution value capture perspective. A lot of apps have moved to their own sort of execution environments because they want to capture whether that's MEVs or transaction fees or priority fees. And there are also ways that we could potentially redistribute that. So the end goal is to ensure that incentives are aligned so that apps don't have sort of like a financial incentive to leave Eclipse, both from like a practical like monetary perspective and a practical like your block space is not enough for me from like a scalability perspective. And B, more importantly, we build like sufficient network effects on the Eclipse ecosystem, right? Whether that's users, liquidity, or composability between apps, such that they see the value of staying on Eclipse and tapping into its users' liquidity and composability with different apps is larger than the incentive to move to your own app chain. I think that's the end goal for us.
So actually, one question for you, Andrew, is why did SX move to its own chain?
Yeah, no, it's a good question. I've talked a lot about it on this show. It's sort of what you guys were both talking about. I think part of our issue was we were really, really early. So we initially launched SX on Ethereum mainnet back in 2019. And back then, Ethereum was pretty much the only game in town besides Tron or EOS, which weren't really, real. And when DeFi summer hit in 2020, we got priced out of Ethereum block space. And so at the time, the only real option to launch on was Polygon. So we moved, or I guess it was Matic at the time. So we moved the app to Matic. And then, after about a year and a half of being on Matic, we sort of realized that one was gas fees on Matic had increased by like 1,000x from when we had first launched. They were still relatively low, but the trend line was, somewhat scary. And then also there's just like a lot of instability with like RPCs, all that type of stuff. So we kind of just made the decision we wanted to have our, and like the only other options at that point were, Arbitrum or Optimism. But again, a similar thing happened there where gas fees on these L2s just continue to increase. And up until, a couple months ago with the most recent blobs upgrade, it wouldn't have been economic for SX to be on either Arbitrum or Optimism. And so essentially we just realized like you need to have control over over your transaction costs. And we also had like hit a big enough level of users and liquidity that it made sense to have our own infrastructure. And so sort of somewhat early, but we launched our own chain and then now we're actually just in the final stages of moving to a roll up. But what's interesting,
Nice.
Not to go on too much of a tangent about SX, but we sort of believe in a different vision than what I think a lot of apps do, which is we have all of our liquidity on our app chain, but we actually have deployed the app cross-chain into other communities. And the reason why is I think app chains, they're very good in the sense that you have full control, but you lose out on a lot of the distribution benefits of being on like bigger, more generic chains or L2s. And so the sort of like hybrid approach we've taken is to have like a permanent home on our own effectively roll up where all of our liquidity resides and all of our power users and highly sophisticated users use. But then we've launched like almost like a SX Lite version of the app for more mainstream use, which we're deploying cross-chain onto what we think are going to be like the big winners in terms of like user mindshare. So we launched on Arbitrum first, and then we're looking at launching on some of the really big L1s like Monad, Bearchain, the sort of like big L1s and L2s that we think are going to really take off. So it's sort of a hybrid approach, I guess. Yeah, so I think that will probably, again, SX is a bit different because our transaction size is relatively small, so we can do this type of cross-chain approach. We can do this type of like hybrid cross-chain approach, whereas if you're doing like a lending protocol, it probably doesn't make sense to have your own L1, or your own roll-up. You should just deploy on other chains because you rely on composability. The transaction sizes are so big, it doesn't make sense to do cross-chain. But for us, we're sort of a unique scenario. So, yeah, it's going to be
that makes a
interesting
lot
to
of
see.
sense.
Yeah, it's going to be interesting to see, like the way we talk a lot about this on the show about how like we see different L2s and L1s as like different countries effectively. And so the same way like companies have kind of like a home country, but then they can still do international expansion. That's kind of like how we sort of think about it in terms of having your own chain, I guess, and then also going cross-chain at the same time. Yeah, so I want to talk a little bit. So I guess one last question on Eclipse, because I do want to get your guys' sort of general opinion on just like the state of crypto right now and like sort of different areas that you're interested in. But how are you thinking about, I know Eclipse doesn't have a token right now, but how are you thinking about, I guess, like revenue generation, sustainability for the chain or L2? Are you guys going to have like a transaction fee? I know the gas fees on the chain are denominated in ETH, right?
Mm-hmm.
Yeah.
And so then is there some sort of like small surcharge, I guess, or like how does the sort of the business operate?
Yeah, the business model is exactly the same as any other L2, which is execution fees minus a DA plus settlement, right? So anything excess of what you pay to the DA layer, what you pay to the settlement layer, in terms of execution fees, you accrue to the sequencer. Kind of what's different from us, and this is kind of the blast methodology as well, we plan to give away the vast majority of our sequencer fees back to the dApps that originated it.
That's actually really cool. So you guys are doing, you almost have like, I think people call that contract secured revenue in the past, but I don't know. Now we call it sequencer cashback, I guess. What is there any other things like that you guys are thinking? Because one of the things that Blast also popularized was, staking all the ETH on the chain and generate like essentially monetizing through that. Is that something? Also passing that back to the users as well. Is there any other types of like incentive, sort of unique incentives or things like that you guys are thinking about?
I think there's a few
Yeah,
things that we're thinking about. Oh, sorry.
No, Ren, go on.
Yeah, there's a few things from sort of like a liquidity perspective that we're thinking about. The first is tapping into the LRT markets. We have some plans there and making LRTs like a core component of our DeFi ecosystem. I can't share too much, but I think we have some exciting plans, some exciting partners that we're going to integrate LRTs with. The second is a slightly sort of like out there proposition. I think the amount of Ethereum holders that are interested in also holding SOL on their balance sheet of Solana has only increased, especially given sort of like Solana's run up in the past year. There hasn't been a chain where sort of people have had sort of liquid access to both of those assets simultaneously, right? There's basically zero like wrapped SOL on Ethereum, and there's basically like very, very marginal wrapped Ethereum on Solana, and like even less so in terms of like LP pairs. I think Eclipse has a unique opportunity, both because of the fact that like we're literally sitting at the intersection of Solana and Ethereum as a SVM L2, but also from an asset and liquidity perspective to potentially be the hub where sort of like to be the hub between these two assets and hopefully have the most like liquid ETH SOL markets out of any chain in existence today. So those are like just like a few things that we're tinkering with.
Interesting. So could there be a future where you use SOL to pay for gas costs, or you use like I guess what type of like integrations could you do? Like have SOL ETH staking, dual staking, something crazy like that. I don't know, I'm just throwing out ideas. Like what does that mean to be like the liquidity hub for SOL and ETH? Is that just for trading, or what are you envisioning?
I think there's a few ways you could think about that. The first is just like access to those spot assets, right? The second question that you naturally ask is what can you do with those assets in terms of like capital opportunities? I think the most obvious answer there is yield, and maybe building something that's sort of like the hub of ETH staking yield and SOL staking yield, but with like a little bit of degeneracy on top. And the third one is like utility, right? What can you do with like your ETH SOL, whether that's like individual spot assets or the LP token, whether that's borrowing against like ETH assets so that you maintain exposure to both Ethereum and Solana while being able to like leverage up on other assets, or potentially integrating some of these assets into the paymaster that we're thinking about from like a pure utility perspective. So there's like any given number of ways that we can integrate the ETH and like both of these assets or the pair into sort of our DeFi protocols and sort of like the core blockchain functionality itself. And that's something that we're still actively exploring.
Yeah, that's super cool. That's, again, very unique. You guys are definitely in that like contradiction of Solana, and Ethereum. It's going to be, you guys could be the chain that brings the communities together, which is pretty cool. And I definitely agree with you. I think it's one of those things where like the talking heads play up the divide, whereas, someone like me who is almost someone would consider like not an ETH maxi, but very, very long the ETH ecosystem. I also own Sol and, use dApps on Sol and stuff like that. So for the most part, I think actual users, flip between the two different systems based on like usage, based on things that they actually care to do. It's also interesting too, because I guess in some ways you guys are bringing Solana, you kind of benefit both ecosystems because, you're bringing Sol liquidity to Ethereum, which is great for Sol and great for Ethereum. But then you're also like bringing Solana developers onto Ethereum, which I guess in some ways could be like a vampire attack. I mean, again, I don't think anyone would say that, but
well, from the perspective of Solana, right? Like a lot of the Solana ecosystem is very positive around expansion of the SVM. In fact, there is a initiative from Anza, I believe, or either that or Foundation, of creating an API, kind of like RefXX, that makes creating new services that use the SVM, kind of, I say, for example, like an optimistic coprocessor or an L2, much easier. And so I think there's general support in the Solana ecosystem of kind of like how the EVM expanded out, of the SVM expanding out. And then, of course, from the ETH ecosystem, it's value accretive if you have an L2, and especially if you have the alt virtual machine L2, because then that expands kind of the robustness and the ecosystem that settles to ETH. So hopefully, both ecosystems see us as value accretive to each other. That's how we see ourselves, but that's kind of the message we want to drive through.
Very cool. Yeah, I think that's a great message, and it's clear that it's going to get a lot of people are going to be excited to hear it. I do want to, before we let you guys go, I do want to get your thoughts on the overall state of the crypto market, predictions for the next 12 months, just like some basic things to get. A lot of our viewers are, I would say more traditional financial people who hold crypto or interested in crypto. But I am curious to hear like what, starting with you, Terry, what over the next kind of 12 months what sectors of the market or what concepts or narratives are you super excited about?
Yeah, applications. And that might seem like a cop-out considering the current state of the TL, but let me explain to you why, and the trend is kind of staring me in the face. SX is kind of a titular case here. Applications are tired of congestion. They're tired of giving away value to the execution layers they rely on, and therefore they're moving to their sovereign block space, both out of need, but out of value accrual as well. And one mega trend, and kind of the two dApps that we see identifying this mega trend is, one in the app chain ecosystem, but the other is a relatively new category called sovereign sequencing. Have you ever used Vertex, the Perpex, and or Sorella isn't live, but Vertex is kind of the titular case here. Right. So Vertex, they sequence their own transactions in an off-chain sequencer. Orders are matched, and then the kind of the matched result is then settled on chain. It's kind of similar to how DYDX4 works. But then because their sequencer is off-chain, they can use multi-chain deployments, and then the sequencer becomes the counterparty from someone trading between, say, like Base and Blast. So you kind of have this single hub of where all the transactions and execution is done, whereas the settlement happens on multiple chains. Sorella, on the other hand, a very interesting idea is they have their own sequencer that takes in transactions. They perform a frequent batch auction by selling rights to reorder the transactions or insert your own transactions into here. And then the MEV revenue that comes back to the protocol in the form of these tips flows back to the LPs of the pools that people are trading on. So just overall, both in the app chain ecosystem and the sovereign sequencing ecosystem, apps are going increasingly toward owning the value that they create, owning the MEV that they create, and therefore increasing the fee revenue, increasing the amount of revenue that they generate, right? And overall, this is taking away from the app revenue of general purpose L2s, and I think that's going to be kind of a clear trend that people reprice infrastructure and applications with. It's not going to be that, one day people are like, oh, there's too much infrastructure, let's invest in applications again. It's going to be that suddenly people see, oh, shit, like Pump.Fun or Radium or Ronin is having, they have like an end-to-end value creation ecosystem. They're selling reordering rights or whatnot, and they're internalizing the fees and the MEV that they create. And maybe then, a similar mechanism to an L2 or L1 is that, people can stake the native token and receive a share of that, something like that. Now these guys have equally as attractive revenue models and equally attractive, incentive structures around the token as does an L1 or an L2. Let's reprice these applications. And I think that's going to happen in the next 12 months. The job of a general purpose execution environment then becomes, okay, how do we compete with these guys, right? It's not that how do we compete with Arbitrum Optimism. They're very large entities. They have a lot of mindshare as well. But the future is these sovereign sequence apps, people that own their own sovereign block space. How do we compete with these guys? And that's what we're thinking about a lot of as well.
Cool. That makes a lot of sense. I mean, I think that's definitely pretty, I would say that's non-consensus right now. A lot of people are talking about, I would say like the farthest you kind of get right now with the narratives around applications is just what I call my favorite line, which is there's more chains than apps and more apps than users, which is obviously not true to a certain extent. There might be more chains than apps. I don't know. We're slowly getting there, but I don't think a lot of people have talked a lot about how about this shift, and just because, like you said, like it's still relatively early in this cycle too. Like there's not people haven't fully grasped that. That apps want to control their own MEV or want to capture more of the value that they generate. So I guess, is there any specific sort of projects, I guess, that you think are sort of interesting that are exploring this space before I get to Ren?
Yeah, Vertex was kind of the pioneer of application-specific sequencing. Sorella is the pioneer of then internalizing that MEV and then redistributing it to specific entities. I believe there's also projects that are in stealth that are assisting projects become sovereignly sequenced, and those will come out of stealth soon. And those three, those are kind of the general ones. There's not that many. CowSwap, they were pioneers here as well. But also in general, there's one chain, and there's one chain only, I believe. I'm not sure, people correct me if I'm wrong, where the total value of the applications on top far exceeds the market cap of the chain itself, and that's Ronin, the gaming chain by Axie Infinity, right? And so there is obviously, I think there's very obvious precedent happening in the market, very niche sections of the market where people value certain applications over the infrastructure that underlies it, right? And that's just going to become an accelerating trend. So then, we're an infrastructure company. How do we compete? It's on scale, right? It's not going to be on, okay, this is the marquee L2 because I've heard of Arbitrum. They were first to market. They have a lot of liquidity. It's going to be, I want to deploy on Eclipse. I want to deploy on, whatever chain because I get more revenue if I deploy on their chain. And my valuation goes up by deploying on their chain, irrespective of the fact that they built a certain community around it. And I think that's going to be the future, especially if crypto becomes more efficient as an efficient market.
That's interesting. That's a very different way of thinking about chains and value accrual, I would say. Like for the most part, everyone in the market has only seen the fat protocol thesis. You know what I mean? Like it's just kind of a given that chains are always worth more than the underlying apps. Though you are right, Ronin is that one specific case. Though I guess in their case, the app and the chain are kind of they're the same team, right? So, and maybe it's also just because their app has hit enough scale too, or yeah, just curious.
Yeah, so not anymore, right? Like the highest valued game on Ronin, I believe, right now might be Pixels, which has around a million DAU, versus AXS, which is no longer. I do not believe it is the highest valued game on Ronin by FTV. Uh, so actually, they were able to bootstrap an ecosystem of external developers where the applications on Ronin, the aggregate value of those exceeds that of the chain itself. And all the developers that, like the vast majority of FTV comes from external developers, not the team itself. So very interesting case. TBD on whether this will persist, and this is kind of the leading indicator, or if this is a pure anomaly, right? Pure anomaly, that means Ronin gets repriced. If this is the leading indicator, then all other L2s get repriced.
Cool. Yeah, I used to be a Ronin bull, so maybe I'll have to re-look into that. That sounds interesting. I mean, Ronin's also sort of a specific case too, because they obviously suffered a pretty severe hack, which might sort of like the bridge hack or whatever. So maybe that's sort of depressing their price a little bit. Yeah, Ren, same question back to you. Things that you're really excited about over the next 12 months in the overall crypto market.
Yeah, I'll start off with the overall crypto market. I think it kind of feels like we're living in a simulation these days. There's a lot of interesting global events and like global trends, whether that's like sort of like just global global degeneracy, people wanting to bet more, or sort of like just general societal fed upness with a lot of things. And I think that does express itself in a lot of like the on-chain activity that you see today. Market outlook, I'm not a good trader, even though I did work at like a hedge fund previously. I still think that overall we're in a good state. There's strong demand, as you see from like the Bitcoin and the Ethereum ETF that launched today. I do think it's a completely different value proposition, both as an asset and both as sort of like new infrastructure rails for the future. One interesting thing that I'm very excited about is crypto as app platforms and us going back to our roots of sort of like Lego building blocks, right? I think when DeFi first came out, one of the things that I was very, very interested in was the concept of like DeFi building blocks, DeFi Legos, where people were able to build composable apps on top of each other. I feel like we've partially lost that, whether that's because of like VC investments, misaligned incentives, everyone trying to become their like own thing for like more value capture. But that's one thing that I'm excited about. I don't think it will happen overnight, and it basically requires apps to realize that they are able to play these sort of positive sum games with each other, where by tapping into like users liquidity and network effects or composability with others, they're able to build much more valuable applications in terms of increasing their revenue or minimizing their costs than if they were a standalone application, right? And I think that's also a pitch for sort of like the slightly more TradFi listeners that we have today. One of the greatest enablers of large multi-billion, $100 billion companies in Web2 has been this sort of idea of network effects, right? Where the value of the network increases as more products and services, whether on the demand side or supply side, come join the network. But for every large company with large network effects in Web2, that's always traditionally been siloed, right? Uber, Airbnb, all of these $100 billion startups and unicorns, they've always had siloed network effects. Whereas what crypto as ad platforms of the future enable is for these network effects to exist across apps rather than within siloed app environments. And I think the amount of value generated or that is going to be generated from these like excess network effects between composable apps is going to be an order of magnitude than what you see in like big tech and Web2 today.
I remember like DeFi money Legos. I was such a huge fan. And I was still a huge fan of, basically interesting composability ideas between NFT finance protocols, NFT protocols, DeFi, right? Like imagine if someone could permissionlessly build like a, recursive lending sports betting book, right? Where you could just borrow against your position and add to a certain position. I don't know, like, or perps based on, where different prediction markets midpoints were trading. It's the idea that you can do stuff with other people's, dApps in a permissionless environment. That's so interesting to me. And I kind of miss the days when this was like kind of the norm, right? Like in 21, 22.
Yeah, definitely. I mean, I think back in when DeFi first kind of started to blow up in like 2019, 2020, composability was like the killer feature. And it still is a huge, huge draw. Though I would say like we've lost a lot of it because we've gone from, one chain to like 100. It's going to be interesting. Maybe we get a revenge rally of composability. That could be interesting for sure. Well, it's been amazing to have you guys both on the show. We've learned a ton about Eclipse, as well as it's great to hear your sort of predictions and your things that you're excited about over the next 12 months. We'll have to get you guys both back on the show at some point, maybe in like 6 months to 12 months, and kind of recap the first couple of months of the chain in terms of user adoption and dApps and all that type of stuff, because it's definitely a very unique sort of angle into the market, and like we've talked a lot about, sort of emerging of two somewhat contradicting ecosystems. So we're going to be cheering for you guys, and thanks again for coming on the show.
Thanks for having us.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.